Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey, welcome to another episode of Bullish and Beyond. We are extreme bulls, but we also have some red on JT's ceiling today. There is blood in the streets on the market. Wow, is it volatile. Tesla tanking, down almost 20%, literally down 55 points when I checked before this call. CoreWeave, which has been popping, they're down almost 20% today. And a lot of it is in relation to what's going on in the White House with tariffs and this big, beautiful bill and everything else happening in this macroeconomic environment. So I hope you turn into this awesome episode. JT, give us a download, man. What's going on?
Well, we have, like you had mentioned, we have some really bad stuff going on. Like Doge, we've been talking about Doge a lot on this podcast here. Their whole thing, and I had a whole episode of Bullish Moment on this. We've been looking at deflationary fiscal policy, and we see the dollar breaking below 100. So, I mean, the DXY, the dollar index, that is now under 100. The dollar has weakened 30% in the past 6 months. We have our yields being inverted in our bond markets again. There's less demand in the bond markets. That usually means we have to print more money. And that means Trump wants to
there's a lot of worry
ceiling.
about this bond market pricing, it seems. It's like everyone's freaking out about that.
Well, bonds are the skeleton of our economy. If you were to, not have femurs, right, you're kind of
You would crumble.
Yeah, and it's hard to underwrite loans, right? You got to think about what actually backs up a loan, right? It's treasuries. So, the mortgage-backed securities, that whole thing. When you have the bond market, all these treasuries that are underwater, not sexy, not enticing, especially with the dollar going down, demand for those things also goes down. And typically how you inject demand, if there's not enough demand, the Fed will actually buy those treasuries, right? And that's how they supplement demand in the bond market. Yeah, someone has to keep the economies going because you need femurs to walk, right?
Well, that's one of the issues they're talking about is, is there an issue with the economy in general? Jamie Dimon is saying that there's a crack in the market, that we're going to have problems with the future debt, the debt of the country, which is insane and growing always. I don't see any balance happening in the immediate term.
And who brought it to you all first? Us.
There you go.
I will not stop talking about it. I've been saying that the midterm is bearish since the start of this show.
You have.
And now they're waking up to it,
I read your investor letter too. You predicted it early.
Yes, I was ahead of this. And it makes sense. Like, if you watch macro enough, it makes sense. People are coming to the realization that there's not enough money. So is Trump. He is the problem. Back to your thing with Elon here. Like, Doge existed. We have a 7 trillion gap. Their goal in Trump's term was to knock 4 out, and Trump's goal was to raise 3 in revenue without touching taxes. That was generally their, like, if I were to 50,000 broad stroke, that was the agreement.
Equilibrium.
That was their agreement, to get us back down to a 2% debt to income to match inflation, and we're back to a healthy level. And that's 21%. That's a lot, and it's trillions of dollars. Well, Trump decides to raise the debt ceiling by 4 trillion. And what that means in simple terms is we're going to print $4 trillion. So we're now taking this 7 trillion gap, taking it to 11. He's only brought in a few $100 billion in tariff revenue. And Elon had saved more than that with Doge. So Elon's outpacing Trump. And then Trump just adds the task. He doubles the task, essentially. And it's now unclear what Trump's motives are to anyone that's been watching that policy-wise or, any other fashion. So it's like Don't know. I ultimately, if we do raise the debt ceiling and this big beautiful bill gets passed, we have $4 trillion more to go. I just see this madness continuing. We are going to just like the market prices are hot air, in my opinion. The underlying economic cracks are really just
If we print
the
more money, the stocks
realization.
go up, right? Like the money has to
There
go
you go.
somewhere.
They're going to print until this thing gets so big that it's terrifying. Like my outlook now would stretch this out another year possibly if we do print this much money.
I read something this morning that one of the economic reports came out, and they showed an interesting balance between the potential tariff revenue coming in and the potential raise in the debt requirement. And the theory was though that the tariffs would have to stick around beyond Trump's term. So are they going to stick around for another 3 or 6 months? I mean, we don't know because it's changing like literally week to week, day to day. He could cancel the tariffs, next week after a call with China or something. So I don't think that they're going to stay on forever, let alone even the rest of his term, frankly. But in theory, if they did stick around, there was some type of a balance, looking out 6 years.
I mean, do we have faith that JD will get the next nod? If so, that's possible, right? I honestly don't know how the Democrats recover. I don't know if you've seen the polling lately, but I mean,
Not good.
it's not good. I would say sub 30% in most categories are Democrats. Like it's
Wow.
actually kind of crazy. From literally like most of the minorities, which usually are Democrats, now that they're doing all these mass deportations, like you start to realize that those 13 million Social Security numbers were really just minorities that illegally immigrated and were being purchased votes. I mean, that's genuinely what they were doing. So now you start seeing their numbers getting back to where they really are in our country. And that starts explaining why you look at the county map of the election in 24 and how few blue counties there were. It starts to make sense. I don't know how the
I mean,
Democrats.
there's so much red on the map. It's insane. I mean, the
It,
big cities are, blue, but other than that,
it's like 96% coverage. 96% of the counties were red. And they
it's
might
like
have
when
won
they
inside
show
of.
Verizon like a map of like connectivity around the
Yeah.
country, and you're like, it's all
Yeah.
connected.
It's crazy. Like,
It
yeah,
is
and they
crazy.
might have only been a 1 to 5 point swing in those states, so I don't want to discredit the Democrat voters in those states.
Sure.
But in general, like, there's not a Democrat city at the moment. Like, really, outside of the most populated, LA, these very small pieces in New York, California, and some
Yeah.
other, Oregon. Um,
Here
how
the
much they
Republicans are
recover?
really catering to Elon Musk as well, given that he was the biggest donor in the last cycle. A lot of people are trying to get his favor, from what I hear. So whoever's the next
I
big
mean, he
person there.
made he has the social power to dub presidents. I mean, he gave it to Trump, in my opinion. I think he speaks for any young person. I don't know many 18-year-olds that don't like
And he has the
Elon.
social power for his stock to tank too. I mean, look at this. It's down 50 points at the moment. So
Oh my God. What's the
just
time frame?
bleeding today.
It's down 50% today.
50 points, down 15%.
Okay, I got you. Wow.
Yeah, but just wild. And I'm sure the rest of his companies are taking a hit too. Someone asked me about it earlier, why it's taking that big of a hit, and it's not obviously not on fundamentals per se, but the Elon effect is positive and negative. And when people get really gung ho and excited about Elon, the stock goes up past fundamentals, and then people get upset about things and see potential downside of him, feuding. I'm not watching the tweets, but apparently he's feuding with Trump on X, and X to, you know, Trump social network and whatever else. But it's not good to have that type of controversy at that level. The richest person in the world and the president of the United States. I mean, pretty wild.
It's all being air. But Elon, he
And maybe
he
some of his
follows
posturing,
his principles,
yeah, he does.
right? Trump is not being fiscally responsible anymore. He just isn't.
He's
And Elon was like,
too
that was
much money
our.
out there.
It's a betrayal to Elon and what Doge and all those
He
people,
just finished
all
his
this
work, and then they're going to add another $4 trillion. Like, come on. This
crazy.
is wild.
He sacrificed so many things to make that happen as a patriot, in my opinion,
Yeah, he lost
and he's
over $100
just,
billion in his efforts. So, yeah, he'll make
and
it
here we
back, but
are.
still.
And we're no better off for it if Trump does this. Now, investors like you and I are better off for it, but everyone else that doesn't own assets, I think it's worse. Like the Warren Buffett indicator, which is why he's on a third of cash, is the highest it's ever been in history. Higher than 2001, higher than 2008. People are paying more for stocks than they ever have in terms of a PE ratio
Yeah.
relative to the stock growth, right? That's what he looks at. And that's why he's pulling cash. When it gets like that, people, it's the leverage.
Couldn't it be the new normal though? Couldn't it be that there's more money in the market and people are willing to have outsized risk so that it, maybe can, maybe not can continue forever, but you have a period to run. I mean, if he wasn't putting cash to work back on these April lows, I mean, he missed out.
That's true. That's true. I don't know. I don't know if it's the new equilibrium or not. I I wrestle with this in my head. Like either that's the case or there's an entirely different case where this is more about desperation. Money's tighter in families, they need bigger outsized returns and they don't want to miss out, and this is all a massive, you know, bubble, if you will. Like the inflation
I
and
mean,
the
I hear that
cash
all
that
the
was
time, and people
released.
are being riskier when it comes to cryptos or any of their investments because they're trying to, find that 1,000% return
Is
overnight.
there's no purest expression than the meme coins. I make fun of them a lot, but people would rather, they don't have 10 years to wait. They don't like my strategy. I'm not saying institutional people, but retail. My
Yeah.
strategy is not appealing to them because they are desperate for money. They might only have 500 to work with, right? So they're thinking,
I mean,
how can I get.
you made 70% last year. That's not good enough.
Right. Right. They don't understand in 10 years, you're done. Like at any amount of money,
Yeah.
you know? You could put a grand in and compound 70% in 10 years and look how much money there is. It'll blow your mind. You
Insane.
could do it with 50%. That's like my annualized return target, 50%. We sometimes do way better than that in a year, and other times we do worse. But if I can get 50%, like I'm retiring people inside of 10 years. And that's like my goal.
I'll take
So,
25%. Let's go.
right, luckily we're done with
It
that. Like
is
we're
all about
actually,
that long game. And I think that
it
people need
is.
to
It
stay in the
is.
market. If people are trading out of their positions and, in cash, I don't like being in cash that much because I don't want to miss out on the next turn. And I get like, you managing a fund, way different use of cash. And I could probably do a better
Yeah,
job with my use of cash. But in
100%.
general, keeping it in, like I've heard of a bunch of people I know that used to work at the Apple store, for instance. And you got crazy deals in Apple stock when you worked there. You basically got whatever the range was within a quarter. You got 15% below the lowest price you could buy it at, and
Oh,
it's
wow.
automated through your paychecks and whatnot. But a lot of those people I talked to, they sold their stock off to buy something else. And lo and behold, it's up 1,000% in the last 10 years. Like that's 100% a year.
Right.
So you just got to stay in. I think that's one of my number one things I want people to, take away from having an investment discussion is to stay invested even when it's tough. Like, back in the crash in March, if someone needed to get money out and they sold out, well, then it just ran right back up again 2 months later. So if you
Right.
sell at these low spots, you're missing out on that upswing. And lately the market, at least the US market I can speak about, is like a V curve when on these crashes. Back at COVID or back at March of this year, I mean, it's just like springboards back up practically. It's insane.
It is insane. You're absolutely right. It is different in a fund because you have investors coming in and you don't really decide when you
Yeah,
buy.
and they can pull money out
That's the
too, so
hardest
they're
part.
it's
Yeah, that makes it a little challenging, but you are right. The issue is not being able to pull the trigger when the market gives you those deals, which is why we're so bullish long term. Like if you see a 22% correction in anything that has long term staying power, like Bitcoin or Tesla or
yeah.
Apple, like you're an idiot for not doing
I
something.
mean,
But
if
if
you buy
you're
Tesla at at
fully
the low point today, it's going to be higher though, in a week or something like so.
right, hmm
You
so you got
taught
to
me
ask yourself,
you
like,
taught me something about that. You had a rule. I think your rule, remind everyone, is if it goes, you have to wait till there's an 8% drop in order to buy in.
yeah.
Was that your rule?
Yeah, I don't chase. And in crypto, stocks are going to be different, even though I think 8% is a good target in general. Like I'm a very patient investor, so like I put in 5% of my cash at the low around 75-ish into some alts, just rebalancing a little bit, and that performed very well. What my fund went up 48% in the next 2 weeks, right? So having the cash allowed me to capitalize on that market
Yeah,
opportunity.
you
I'm
need
still
cash.
18% cash, I do think we're getting, I think we're going to have really great opportunities to buy in the next, I don't know, 6 to 18 months now with this debt ceiling thing. I would have said 6 to 12 months 6 months ago, but that was with everything up until last week happening. And now I'm like,
Yeah,
they might print us another year of runway. They very well could. Um, so who knows, right? And these prices could get crazier, especially if they cut rates on top of this. Like it could get to the banana zone, like to where it's clearly running into a brick wall. You know, but who knows? I don't know.
we don't know.
At the end of the day, we're just
But
people
you
that
got to find those times to buy right. And I took your advice and applied your rule to my latest stock purchase or one of my recent stock purchases. I bought CoreWeave 2.5 weeks ago, and I followed that exact pattern. I was watching it every day and it was going up so fast, and I couldn't find that entry point. But then the one day it dropped 10%. It actually went down a lot lower, but I didn't get the bottom of it. It was like 116 the day before, and then I bought in just at around 100, and it ran back up to 165 after that. And
yeah.
right today I think it's in the 130. So I'm still up 30% in 10 trading days. So not bad.
And just to add a little more complexity to how I would play that,
Yeah, please.
I so if you had 10 grand, let's say, that you were trying to move, and I would divide 10 into five $2,000 shots.
Okay.
I would have sold 116 to 100. And based on my confidence at that moment, my conviction, I would have deployed one to like maybe three shots.
Okay.
If it would have went to 80, 92, I would have done another
Two
shot,
more shots.
88, another shot. Yeah. And then your dollar cost averaging that entry. And then when
Yeah.
it finally recovers, you're going to have a higher return, so
I,
time,
I, I could
I
have put in
like
a
to,
bunch of a bunch of limit orders and stuff like that, but I'm not
yeah,
day trading.
exactly.
I'm doing other stuff. So you're a full time investor.
Yeah.
So I just kind of put it in, and I just did a market order, frankly, and I just got into it because I didn't want to miss
Yeah.
out. I didn't want to sit there and play the game of, it was
I'm
at like
glad it was
a
helpful.
102 and change or something. I was like, I don't want to sit here and, play around with this price for a dollar or two either way.
Yeah. Then, and to remind everyone, the goal is if you're long, your only fixation should be getting your entry lower. So, like, if your average entry on CoreWeave is 103 and it goes to 97, that's a blessing. Get that 103 down to 101 by
Yeah,
97,
buy a little more.
right? Because you're going to get a higher return on the tail end, right? If
Yep.
your average entry is lower. And that's the kind of the art of the long game. Going out of a position and selling out of a position. Sometimes I'm forced to as a fund manager, but it really sucks, because if you buy back at that asset, I bought Bitcoin at 32,000 in the fund. That's my entry right now,
That's awesome.
right? Every time I buy Bitcoin,
Hurt your average
that's going
Bitcoin
to,
price. Yeah.
there you go. It's going to run me up. And I'm getting more checks with more size. So my, you know, if you put 10,000 in versus 100,000 in, it's going to dramatically shift what the average
Oh
entry is,
yeah,
kind of a thing
a lot.
as well. A lot. So it's like I've had to learn all of these things as a fund manager that personal portfolios that doesn't really apply to. Um, Either way, I think you played it well, genuinely. That I'm glad the rule helped. Another
The
rule that I always will
the stock's
say,
overbought right now, but I think it's going higher long term. I mean, like short term is so hard to predict on stuff like this.
it
I
is.
did a bunch of research recently on CoreWeave, so I want to share it with people here.
Yeah,
They
please.
are the number one company offering an AI data center. So they are
Hmm.
direct partners with Nvidia. Nvidia is their number one institutional investor, and they owned, I think it was about $1 billion pre IPO a couple months ago, and then the day of the IPO they bought another quarter billion, which they're
Wow.
up 400% on in 3 weeks. So good job, Jensen Hung. Um, so they're killing it. But their partnership with NVIDIA is multifold. So they have direct access to the latest GPUs. They have special pricing, which I don't know what the pricing is, but preferred pricing. And from that, they have the two largest companies basically in the AI inferencing space, Microsoft and OpenAI. Those are number one and number two customer for them. And they're not going anywhere. So, Microsoft and OpenAI can't have enough 100% secure data centers spun up at any time. So they need this extra inferencing power. So they're just, renting it from CoreWeave. And, right now they're
Smart.
getting a great price, but they're on the newer stuff, but their older GPUs are still being utilized too. And, there's a
Hmm.
pretty long useful life from what I've seen on these GPUs that even the older ones are still, useful enough that people are going to be using them long term. So at first I was a little bit worried that maybe, the newer GPUs would kind of outpace the older ones enough and the older ones would fall off, but they're still profitable to have these older ones. And
Yeah.
the way that the company is structured, they keep raising debt to basically cover their capital expenditures, which are
Yeah.
100% based upon contractual revenue. So
Hmm.
when a company comes to them, they just did a deal with applied materials the other day, and it was like a $7 billion contractual deal. So when they get that, they know how much GPU power they're going to need. They go out and they buy it ahead of time and secure it that way. But they're using debt to do that, and so it looks like they have a crazy amount of debt and capital expenditures. But listening to the CEO, talk about it, he's only buying what is actually contractually obligated to be used. So there's
Hmm.
almost no way it's not going to be a good, purchase and not go out and buy those GPUs. And then in the end, the long game here is their GPU utilization rate. And basically anything above 50% usage is going to make them a profitable company. But if they can get to the point that their GPUs are like 70, 80% usage, they are going to kill it. So really just
And
fine tuning
realistically,
that.
I don't see with demand in the market right now how it's not 99.7% occupied. Like, I
I
don't know
mean,
how they're not.
inference demand is going crazy. I mean, so many
It's
people like
going
were worried
crazy.
after DeepSeek that like, oh, we don't need all this power. Yes, we do, because the future of the thinking models is going to require 100x what these past models were doing. They're just spitting out regurgitated data. I mean, and
Yeah.
we're at like the infancy stage of the thinking and inferencing, in my opinion. Like, we don't have
No, you're
robots
right.
running around in our physical environments. I mean, I can't even imagine how much compute we're going to need once the robots are actually fully interacting with us on a daily basis everywhere in the world. It could be a
And
million times more compute than we have right now.
it absolutely will be. I mean, inferencing is the majority of the computational load. Just is, right? Like it's where you're going to get the most squeeze or the most juice out of a squeeze. So, and you're going to want to be very close, like that robot, that model, whatever. Depending on how they break it down in a software perspective, it's always going to be advantageous to be closer to a data center cluster.
Yeah.
So they're going to want them everywhere, right? Because you're going to have way better connectivity, way faster inferencing. So they're going to, otherwise, you're going to have a massive thing in the robot, and it's doing it right there. Tesla is offering to do that in their vehicles, which is super interesting. They have enough
Yes.
real estate to do that in their vehicle, and they have the battery. They're actually uniquely positioned for that. But a
Really cool
robot,
model.
yeah, the robots would look crazy. And I just, if I, since we're selling those to retail,
Yeah.
you can have a 7.5 foot giant thing in a factory that no one looks at, right? That's different than a robot that does your groceries and things like that. In the
I
future,
think it'll be a
inferencing,
combination. Like there'll be some inferencing on device on robot, and then it'll be the heavy lift in the cloud probably.
yeah, and I think the models will be web hosted, and they're going to be so efficient, they're going to be installed directly into the device, but them having the model and then also being able to interpret and make decisions and make functions, those are two separate things. Training a model, getting it ready to then, it's almost like a software operating system. Once it's running on a computer, it's only what, 0.5% of the actual computer. And then you have all that solid state, you have all that RAM, all of that's being optimized for your games, your apps, everything else. It's going to be very similar to that. But the inferencing part is like downloading a terabyte. It's now like downloading Call of Duty. It doesn't take a lot for Microsoft OS to work, but if you want to play Call of Duty, it's a 1.1 terabyte
Yeah,
game, right?
it's
Rendering
big.
it. Yeah, no, unless you have a top of the
That's the
art
size of most
computer.
people's hard drives, and that'd be the whole thing. You know?
Yeah, right? Yeah. So I mean it's just so much more important. And that's why these things are so undervalued long term. Um
I do think the value is going to go so much higher, and like it could be down 50%, next week. So it's so hard to gauge that because it ran up so fast that it doesn't really make sense. But it's also the fact that people are catching on to the fact that it could have that value in the future. So that's what does make sense about the run. But I mean, it's hyperbolic, which is, not normal.
yeah, 100%.
It's so funny. They had trouble selling their IPO at their initial price. It went down the day of the IPO launch, and Nvidia kind of stopgapped it by putting in a $250,000 purchase at 40, and that literally that held the support there, and it didn't went down to 39 at one point. But I mean, just such a smart call, and clearly have the inside information. I mean, Nvidia knows where this is headed. I still think Nvidia is the number one best positioned stock as a pure AI play in the world because everything kind of flows up to them. Like a lot of these companies, they rely on Nvidia, and there's no other game in town. I know that there's a company called Grok that makes LPUs. Google makes their TPUs, and these are all relevant, but they don't have the software and hardware scale that Nvidia has put out there. And if anyone's going to catch up, it's not going to be for 5 or 10 years.
100%. And, Jensen's been talking about this since the 80s. It's crazy.
He's been planning for it. That's why he's getting dubbed a monopoly because he freaking knew it and he invested his whole company into it.
Yeah.
It was make or break.
And I would say the closest competitor in terms of capability and function is AMD. Like I was listening,
I
but
agree.
that's also Jensen's family. That's his
They're
what is it?
related.
Yeah, they are. It's like cousin once removed or something. Either
Yeah.
way. And they were asking about her being a competitor, and he was just like, I don't know what you're talking about. Like we buy a lot of their stuff, and we're family. It's a business. It's a partnership. So I mean, like AMD makes enough quality to make it into some white labeling for Nvidia. I don't know the extent, but
They're
they're
they're not
making
growing.
great
They're not
stuff.
growing the same way though. I've looked at their stock multiple
Right.
times. I don't have the conviction. They're missing their earnings reports. It's not the same company. They don't. I mean, Jensen might be the smartest CEO in the world right now. So
Yeah, I totally agree.
yeah,
I'm just saying that's the best
yeah.
that is coming after their market share. That's the best, and they're not even in the same game. It's minor leagues to the MLB kind of
One
thing.
really cool thing I want to share is that they have new ways to work together now with companies like AMD or Google's TPUs and whatnot. They launched a new thing at Computex, this big conference they had, and it's called the NV Fusion Link or NV Link Fusion, because they had an NV Link already to link up their own systems and GPUs, but now this NV Link Fusion allows any Nvidia GPU or CPU to link up with any other companies. So now now any warehouse, any data warehouse can just use whatever CPU or GPU they want, and then they can take another one from Nvidia and match it up. So really game changer when you make these custom chips and stuff like that. Like for instance, Broadcom makes a ton of custom stock chips for a company. So if you had this custom chip that in the past you would not have been able to pair it up with an Nvidia GPU, now you can. You just have the NVLink Fusion. So really powerful, kind of unlimited scale at that point. And I'm excited to see what people are going to build with that.
Yeah, that's actually really. He's just so smart for integrating an eco. He learned from Apple. Let's put it that way, right? Like,
Yeah,
you need an ecosystem. Um, you need an ecosystem for this stuff to work.
he did it right. And
He
you,
really
you
did.
have to play with others the same way like Apple, let Windows, use an iPod. He's letting other companies use Nvidia, and it's a really smart long-term play. He wants to be the center of it all, and this is one of the ways he's going to make it happen. So really cool.
These are all things to be bullish about in the future, in the beyond, everybody. We got to look long term. I think all these names are worth doing your research and understanding, what we've been talking about for sure.
Pivoting a little bit to stocks, going over to combination of stocks and crypto, I want to talk about Circle. And you'd mentioned that the dollar had been debased, significantly recently, and so that might lead me to think that we're going to need more stable coins in the future to transact that way. And Circle, being one of the biggest stable coins out there, or one of them anyways, and they have this relationship you mentioned, with Coinbase. They just IPO'd today, and the IPO initially was priced, I think, at 31, and I looked right before the call, and it was in the mid 80s. So it was up about 180%.
Yeah,
Wild.
that's great.
JT, give us the breakdown on why Circle is relevant and what is their stable coin, and what are we thinking is going to happen with that in the future?
Yeah. So Circle is a OG. They are a veteran in crypto. Their USDC stablecoin product, I would say, came out in 2015, a year
Wow,
after
that long?
Coinbase's. Yeah, they've been around a long time.
I did not know that.
And yeah, they came out about a year after Coinbase in 2014. So I mean, those two together have been some of the biggest companies in crypto, working with governments, educating institutions. They have done a lot of work in our space. So I have nothing but respect for the two of those companies. And
Nice.
um, some of the things about Circle that definitely brought cause for concern long term, right? Because that's what we talked about, fundamentals. The stock could be doing great today, but if you actually look at their SI filing, I think that's what it is. Um, to the IPO, they actually posted their books for the first time because it's been a private company until now. And, you know, 50% of any revenue generated from the distribution on Coinbase, so like basically half of what Coinbase does for them goes to Coinbase. And they
Wow,
have,
it's a lot.
compared to Tether, it's a lot. And then you have Tether, which is a stablecoin, the exact same business. Okay. They manage roughly 3 times more of the capital,
Okay.
but profit 60 times more. Circle has
It's
built out,
20 times the, ROI leverage there.
it's insane.
Wow.
It's crazy. So Tether has predominantly leveraged smart contracts. They have 32 employees. Circle has
32.
1,000. Yeah, Circle has 1,000. They have offices. They have, they're everywhere. They're domiciled
Infrastructure.
in America. Yeah, they have a way different capex. So by the time you actually get down to the bottom line, they're profiting very little, and it surprised all of us in crypto because stable coins are the most profitable business you can run. Why? It's very simple. You give me $1, I make something out of thin air called a stable token. I have to pay to keep it on Ethereum, so every transaction I got to pay some gas fees.
Yep.
But for every dollar, I buy treasury bills. Your operations might be 100 basis points, 1%, and you're making 4 to 5. So you're making an 80% spread roughly in your business,
On every dollar
right?
invested,
And
yeah.
yeah, and it's like, holy crap, right? And it's super
But then Circle gives half of that
secure.
away instantly to Coinbase.
And then they got to make the other 40% work for their massive capex. So they end up coming to the bottom line very, very low. I forget the exact number, and I don't want to
It's not a
misrepresent it,
lot.
but I thought it was like 13%. And you
Wow.
got Tether managing 110 billion. At least last quarter I looked, they were managing 110,
Okay.
and they profited more than BlackRock in dollar amounts.
What? That is epic.
Yeah, think about that.
That's
BlackRock
insane.
manages 11 trillion, guys, and you know
They they,
they made less
they
than
might be good.
Tether.
They might be good at tax at BlackRock too, though. So maybe they wrote some of that off.
Yeah. hmm
Is Circle the
But
um only coin like that that I can get on Coinbase that is tied to the dollar? Or I mean, can I buy Tether on Coinbase or no?
yeah, you can use Tether on Coinbase. Actually, well,
Like, is there a
that
is there,
might
is
have
there a prefer, is
changed.
there
That
a
might have
preferred
changed.
relationship that makes it so much better
Yeah,
for Circle
they
and
are.
Coinbase?
Yeah, actually, yes. Yeah, they do have. I had forgotten that a couple years ago they had an exclusive agreement. Tether is
Okay.
everywhere else. Um, Literally everywhere else outside of maybe nah, they're on Solana. They're everywhere. Um, their biggest foothold is Tron, though, and that's where a lot of Latin American countries and African countries have their money. It's actually pretty interesting. If you're in a country where,
And
you're
inflation's
getting
going up.
inflated 10% a month, 10% a month,
You better put your money
you're
somewhere
up
else.
120% a year just by picking up $1. So a lot of them park their currency in US dollars on chain to avoid their
Okay.
government's abuse. So Tron's a holding in my fund. I've done very well with Tron. I was late to the game, but I'm still really happy about it. I don't really like their leader, Justin Sun. It's a whole nother conversation. Circle does have that
Do you
relationship.
care about the Circle coin versus Tether? Like, I mean, do you have a preference? How should we think about that as potential, buyers of the stock or potential, crypto uses?
I think Tether is a little bit riskier for a few reasons. One, we don't have a proof of reserves, and that's actually been a thing that Tether has protested against, which is super suspicious. And they're a Taiwanese company,
So
right?
they won't prove
So
that they bought the treasury. Is that what we're saying?
I'm saying that they manage a lot of money and they don't post what they're doing with it regularly, right? They're selective about what information they release to the public,
So
and they're based out of
potential for
Taiwan
fraud in theory. And
in
at that
theory.
point,
Yeah.
then it would not be a 1-to-1 with the coin.
Yeah. And I've heard the CEO of Tether on Bankless, a podcast I listen to frequently. He seems like a good dude, but so did Sam Bankman-Fried.
Yeah.
So like you just don't know. You never know, right? And USDC is a public company now. Jeremy Allaire is a veteran in this space. You can tweet at him. He has hundreds of thousands of followers. He is a stand-up guy. He has a moral integrity. He's working with some of the best people in our field. So like there's a trust factor, and it's an American company, right? They
Yeah.
decided to run up that capex to invest in America. So like if you're a patriot, I would say USDC would be the patriotic choice,
Okay.
but they both do the exact same thing, exact same function. In terms of a competitive thing, like you don't get any additional benefits for choosing one over the other.
Yeah.
However, there are stable coins where you actually do get better terms. Like the BIDL token's a stable token, but they share it's BlackRock's token, they share the treasury yield with you. So you're getting
Interesting.
minus 50 bips, whatever the yield is, and they
That's kind
keep
of
it. And
nice.
they sold 500 million in like 6 hours when they released it, right?
Wow.
So they're probably going to make a way bigger one that is open to the public. It was a private placement thing. So
Okay.
only accredited investors for that one. And then you have Athena, which is in my fund. It basically does exactly that through a decentralized protocol. So if you hold the ENA token, you're basically investing in this software that automates the dollars to treasuries yield and then gets distributed back to the users by the yield from their stable token by burning the ENA token. So the value goes up. Super interesting. It's a
Interesting.
small
So
weight,
they
and I
don't
like.
they don't send you money or any extra tokens. It just literally inflates the actual token value as it goes.
It's like a stock buyback, right?
Yeah.
You
The
can
EP,
think of it
yeah.
that
Earnings,
way.
earnings per share go up. Everyone makes more money.
Exactly. You can think of it that
Interesting.
way. So there's a lot of different
I
startups that
do
are
like how you
making.
called out, the USDC being the US based and, being the public company now. Like being a public company is so hard for people that, don't know. I mean, I've only done cursory research on what it takes, but it's an insane amount of disclosures and cost that goes into that. So like it's really hard to, commit fraud when you're bringing a company public. There's too much information out there on it. First, like you said, Tether, we just don't know. So that would lead me, if I was keeping a bunch of cash in a stable coin, that would instantly want me to get the, USDC then.
Especially when you get no additional benefit.
Yeah,
Like
there's no
you
there's no
don't
reason
like.
not to. Yeah.
Yeah, exactly. And if you really wanted to help Jeremy out, don't do it on Coinbase. Do it anywhere else.
That's
But
funny.
the biggest winner of all this is Coin, and specifically, I got to call her out because I adore her, Kathy Wood. I remember in the belly of the bear market watching her get slaughtered by MSNBC, CNBC, all of them for being down 42% and buying like a madman. And her biggest holding was Coin. She was like, I am going so long. She levered up when her fund's down
Wow.
50%.
Just kept
And
buying.
she's crushing it, and I'm so happy for her. There are very few people that are in the public eye that do what we do. We go discretionarily long in tech, so you find value in growth. Everyone in the traditional mindset thinks value and growth are two different things, but you can find value in growth. And like,
Yeah, it makes
there's not
sense.
many people that actually
It's mispriced.
apply. They can't confidently say the attainable market in 10 years, so they don't even try, right? The
Yeah.
difference is you try, you do your best, and like you're good. It's like, it's
Kathy Wood did it
passable.
with Tesla too. I mean, there was a bunch
Hmm.
of people hating on Tesla, and she's like, buy, buy, buy. And, every time she does anything with it, like, the other day she trimmed like $17 million worth. And like, that was like, 2% she shaved off or something. It's like, people don't understand people have like tax obligations and stuff too. You got to move money around. It doesn't change her conviction. It's her number one holding. And, there's a reason that, Coinbase and Tesla are some of her top holdings is because they do have a big run ahead of them.
100%. And also, as a fund manager, you have a fiduciary responsibility. Like, my cash position is profit. Like, if I'm up 500% on a token, like, I have a
You got to
responsibility
take
to
some money off the table. Yes.
I
Eh,
got to realize something,
yeah.
you know?
Yes.
Um, so naturally it just builds. And oftentimes, instead of me actually executing a sell, new LP capital, that would be like me pulling profit to avoid the tax liability. So like
Okay.
sometimes the cash grows and then the market gives you a great opportunity. Like that's basically what happened this last dip to 75. I'm not a genius. It just like
Got to buy the dip.
happened that I was going to sell out of my XRP position that's up 400 something percent, and then a new LP came in. So to avoid the tax obligation of making that sell, I just took the equivalent in cash and deployed what the remaining amount was from that LP.
Makes
right?
sense.
And then it just worked out. But like there are other times where you have someone asking for a redemption and you're fully deployed and you have to pull enough out to cover the
You got to
taxes
sell at a
and to
time, and
make the
maybe
investor whole.
maybe it's not the right time to sell, and you have to do it anyways.
Yeah, like if I know a redemption's coming in August and it's big, it's like 5% of my fund,
Planning.
right? Like I gotta, if there's a really nice price on an asset, I gotta, that is a fund manager's job. Like you have to balance all of that. So very rarely are these little trimmings
Yeah.
anything to consider.
As a retail
It's not
investor, we
even
all
worth
can do better
mentioning.
too. I mean, I mentioned that's one of the things that I can work on personally is, locking in some profits every now and then. But my mindset's always just keep deploying capital, keep it growing. But sometimes, when the Circle IPO is up 200%, do I sell off some? Like, no, let it run.
See, I think on something like that, based on the fundamentals, I'm playing with house money.
Yeah,
If it was that good out the gate, you want to know why? Because those things don't stay like that. There's going to be a huge
it's going
sell
to be
off.
volatile.
It will be. And, you're
Well,
going to
let's
be
see.
really
The market
grateful.
just closed. Let's maybe it sold off while we're on the call. Nope, ended up 167%.
There you go.
Uh,
There you go.
It's been a pretty wild market day, and hopefully a good conversation for everyone here. We covered a lot of topics when it comes to stable coins, some of the volatility, how to buy into stocks or crypto. At those right points, you gotta find the entry point. So really glad you taught me that. That helped me get into my CoreWeave position. And I encourage everyone to do some research. You need to do your own research. Look at CoreWeave and some of these other AI investments out there. I do feel they're going higher, but in the short term, anyone has the best guess. So check it out. Thanks for tuning in to another episode of Bullish and Beyond. Cheers, everyone.
See everybody.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.